Hello, everyone. Welcome to the weekly roundup. Today, we will cover the US elections, FOMC rate decisions, and market updates. Hello, Ben.
Hi, Eva. Happy Friday.
Happy Friday. It was an interesting week.
That's for sure.
Yeah.
Yeah.
We're going to kick off with the US elections, obviously. So, how was market reaction and what can investors expect going forward?
Yeah, so it's a great question. I mean, the initial reaction was similar. Well, I'd say maybe not similar to last time. Similar to last time from how the markets opened when he won in 2016. And the markets took off. The Dow was up 1,500 points the day after the election this week. Bonds sold off a bit on it as well. So I think initial reaction is more of a portfolio repositioning. Um, the view coming into the week, it looked like polls were suggesting that Harris had gained some momentum and attention back. But as we've seen with so many of these types of events recently, the polls aren't worth their weight in salt. And the Republicans look like they're running away with it right now.
In terms of macroeconomy, what are we anticipating in the broad policy direction from the Trump administration?
Yeah, so I've read a fair bit just trying to digest it all right. And I think that the people that are most upset with him winning seem to take what he says at gospel. And I really think it's not going to be the case. He's got all these things that he wants to do. And yes, of course, if he wins the House, the Senate, and the leader, he has more power to do that. But I don't think he's going to be able to accomplish everything that he wants within the short window of period that he has. So initial knee-jerk reaction, real positive for markets. I think the momentum around that is probably more based on where we are in the cycle. Maybe a little bit less based on him in certain areas. I think in the daily today, I put out the amount of inflows into the IWM, which is the Russell Small Cap ETF, was massive. And so there's a bit of a feeling that tax cuts are going to be better for small business. Maybe there'll be more funding for American domiciled businesses. And so that small mid cap area of the US market is much more tilted towards the US and a little bit less international. So there's, I think, a feeling that it's going to be more positive for US businesses. That's probably the case, but you can't flip a switch and then all of a sudden everything's focused on the US. Some of the earnings releases this week and anything that came out after we'd found out he won, like Under Armour, which I noted, they're talking about maybe we have to change supply chain depending what the tariffs look like. So there's lots of things to cover. Some of the people it looks like he's likely to tap have some pretty progressive thinking and strategies around tax cuts, both for the individuals and for corporations. So most of those things should be pro business, but if you're trying to, pull everything back to the United States, manufacturing, all of that, that's going to be a real bumpy ride. And everybody remembers 2016, but not too many people remember 2018, which was he was starting to roll out all these policies. And then 2018, the market had a bit of a panic attack and sold off pretty aggressively. So, I think generally we're going to see lots more volatility. I think he'll likely focus on the tax cuts for his initial decisions.
Okay, let's touch a bit on interest rates. What did we see yesterday, and what can we expect?
Yeah. Powell probably didn't like taking a second seat because usually he's the main event. And so they had to switch the meetings, which usually start on the Tuesday and the announcement comes on the Wednesday. And so we had Wednesday, Thursday this week. A lot less attention around what he said. They did cut 25 basis points, as you know. But the funny thing, I'd say maybe not funny, but the thing that's happened since they cut the first 50 basis points now to here is financial conditions have gotten a lot tighter. So rates kind of went up against them. Rates went up against the view that he said, things are okay, inflation in check, we're going to keep cutting, and the bond market kind of said, we don't believe you. So yields have gotten a little higher and things are a little bit tighter than when he cut the first time. So I'd say there's more to digest and look through what their plan is. But I'd say continued high probability that they cut again in December, alongside alongside Canada and Europe as well.
Okay. You touched a bit on volatility. What is happening in the commodities market?
So yeah, I think this is probably the one most at risk with Trump winning, and so he's won, and people seem to indicate maybe it's a risk to the Canadian economy because we are so reliant on exporting our energy to the U.S. And if he decides to attack that, that's not good. If he decides to open up the strategic reserves in the U.S. and just pump oil and gas into the economy and try to really push prices down to stimulate the consumer. I think there's a bit of fear that that's going to happen. And so we've seen commodities be quite volatile, to your point, and some potential downside risks. But I actually thought oil would have sold off a bit more with this kind of victory that he's had. And so I think it's a risk we continue to watch. And I don't think he dumps the strategic reserves because the Middle East is a real big ally for him, and I don't think he's ready to do any big negative damage to that part of the world right now.
Yeah. Were there any interesting earnings releases this week? I know you mentioned Under Armour.
Yeah, so Under Armour was good, was a positive one certainly. There wasn't really any others that jumped out at me. There was quite a few earnings releases this week, and I think we're about 75% of the way through, both in Canada and the US from an earning perspective. And we have more beats in the US than in Canada. I think we're right now at about 65% beats in Canada, and the US is closer to 80% beats. So, I think we've mentioned when we look at earnings, it's the areas and the sectors that are missing. And so, like consumer discretionary continues to be an area that I think they have something in the neighborhood of 35% have missed estimates. So you get a big revision. Maybe that gives you an opportunity to look at a sector. And so I'd be digging through some of those. But there wasn't anything specific that jumped out at me that looked exciting either way.
Okay. Did you make any changes in portfolio?
So just the continued changes, as we get rallies in these government bonds, I'm switching out to corporate space. I still like that and will continue to do that. The more and more I think about the policies that are likely to come globally, not just in the US, is more fiscal spending. And I think we've reached, as I mentioned, I think on the last call or the one before, we've reached that tipping point now where corporations are better funded than sovereigns. So I've started to consider making that. So still doing that, still continue to move that way, and did add a little bit to DBC today, which is the commodities basket ETF in the US.
Okay.
Yep.
Sounds
Yep.
good. Let's see the charts.
All right, sounds good. All right. All right, November 8th, here we are. I don't know if you've seen this one or not, and I haven't really done the full deep dive on this to understand if this is actually factual. But this is what the US looks like. Red, of course, is Republican and blue be Democratic. And there seems to be a focus around the schools, particularly the Ivy League schools, where most of those blue areas are. And so when there's some thinking around maybe more of a woke type thinking, and more of that type of voting and support in the blue areas, obviously concentration and people and things like that certainly play a role as to how this is going to play out. But I thought this was an interesting chart and graph just to see it how, I'd say overly red the elections played out. As you probably followed some of this as well, oftentimes it is the you don't necessarily win the popular vote, and it's the last time that a Republican won the White House, and when the popular vote was 2004 when George W. Bush won, and so it looks like this time Trump's going to win the popular vote, going to win the Senate, and potentially going to win the House as well. So as I mentioned earlier, and I think in the email today, just around there's 25 seats still outstanding, and the Democrats would need to win 19 of them in order to balance the or to have the House in their favor. I mean, I think this is really important and really plays a major part around what happens and how many policies he's able to implement. So we'll continue to watch that closely, and that's gonna take a while for it to play out. Just on the Canadian side, we had Canadian employment numbers out today, and so this was just a quick look. We missed as well in Canada. We think expectation was so there 28,000 new jobs expected. We finished around 12,000 new jobs expected. But one of the first areas that we haven't seen in quite some time was this green one down here, which is government actually jobs contracted for the first time in probably 4 years. So that was interesting of note. Generally speaking, though, from our economists, the thoughts around what's happening there, continued weakness in the Canadian employment numbers. If you actually looked at where the jobs were, they break it out into different sections, and kind of that 24 to 55 range is the core employees. That area actually dropped worse than the older and younger people. So well, the jobs numbers was quite weak in Canada, which is why we think rates continue to come down. Obviously, we think rates come down in December, but continue into the second half of next year. So this was, yeah, just another little quick picture at it. Hiring intentions continue to be at super low levels, and the firms reporting labor shortages as well at low levels. This shows more people are coming into the employment picture and less jobs available. So, this is a continued picture around why I think the Bank of Canada continues to cut from these levels. So just two more quick ones before we wrap up here. This is the balance sheets of the central bank. Obviously, they've been reducing their balance sheets, but as the economy slows, as we start to see, inflation numbers come in, we see obviously new leadership in the world, particularly in the U.S. The greater likelihood is this number starts to expand again, and these numbers start to expand. Fed and the ECB, that's when money flows into riskier assets, and so we'd continue to line up with the view that we think riskier assets go higher in the next 6-12 months. Last one is just what's ahead. Continued more data next week. Nothing super material. Just a look around the world. China had some numbers come out today, just around how much more stimulus they're going to put in. Their market's correcting onto that. I think it continues to be where China is putting out the news as they can, when they can. Biggest concern is the tariffs potentially with the U.S. So that'll be worth watching. But we exited the position in China and may look to re-enter at some point if weakness continues. So that'd be something we'll be watching. U.S. consumer prices next week as well would be the other area that we'd be looking at what's going on next week. So that's it for the charts today.
Great. Anything else to look out for to track this week?
I think really how the market digests from here. So leading into the election, there was a lot of skew in the market where there's a lot of people buying puts and calls were cheaper, and that's why I think the market rallied into it here. And now we're going to finish the week here quite strong in U.S. markets. Canada's down, but U.S. market's quite strong. So I would say, let's see, do we follow through from here? Things start to settle down. Continue to watch the data as always, but certainly this week was a huge week, and there's lots to digest over the weekend.
Great. Thank you, Ben.
Thank you.
Thank you, everyone. Please reach out to me if you have any questions or if you'd like to book a portfolio review meeting with Ben. For everyone, please visit, subscribe, follow us on YouTube and LinkedIn at Hart Investment Group, and follow our blog, Daily Heartbeat, for more financial news, data, and analysis. Thank you for listening and have a beautiful weekend. Bye.
Thanks, everybody. Take care.